Okay, so here we are again for EU recap. And today is Tuesday, the 4th of March. And yeah, I think the draw for today was pretty obvious. Because if we look back at yesterday's price action, we made this huge move towards the previous month high, which were the equal highs of January and February. Yesterday we already made a very big push, and yeah, today we just smashed those highs. We consolidated a bit, made a big push, made a smaller retracement, and made a push again, taking out those highs. Um, yeah, so looking at today's price action, when we look at that a bit better, what happened exactly was that yesterday ended kind of sideways price action consolidation, um, but the IOF institutional order flow always stayed bullish. Yeah, so Asia made a small dealing range, took out these highs, took out these equal lows with this high and with this low. But as you can see, it respected, even on the 15, it respected this down close candle. This down close candle was supporting by this down close candle over here. So yeah, bearish candles or down close candles still supporting price. And at the same time, this were actually the same signature, same clues actually that price would make a move, because as you can see, a low was created which took out these equal lows right here. Then price traded up using this order block. If you extend this order block to the right, you can clearly see that the bodies are staying in the upper half of this order block. Price stepped into it a few times to create those equal lows. Then these lows got taken. Price again tapped into this order block. Maybe induce people to go short because of these equal lows, but still this low right here got protected. And also what we have here is of course last unclosed candle, which, no, so it is your first CSD, but to be honest, I wouldn't really look at this down close candle for your first CSD, because this for me is more the order block, and which was respected over and over again. And then there was your first CSD here, second CSD, and yeah, then this large candle up, but we are in the 50-minute, by the way. So the 50-minute created this large fair value gap. When this fair value gap was created, price stayed in the upper half. There was one wick that came below the mean threshold, or the consequent acknowledgement of this fair value gap. Then price traded away from it and then blew through the previous month's highs. Then we created this high, and also in creating this high, we don't have to forget that price also created a dealing range with, for me, these lows and this high right here. So took this lows of obviously these highs, and of course the high time frame highs. So this is then one big push. So if you measure that push, you can, I think you can do it two ways: this low to this high to measure this dealing range, and then you can see two things about this. Let me remove this one and this one. The first thing is look where the bodies are closing, that they are respecting the 50% of this dealing range. Price, tapping, or filling actually. I think it fills exactly this value gap. Let me see. It overshoots it by a pip. So it's filling this imbalance and then close back at 50%, which of course is a very bullish sign. And the second thing that I noticed here was that there happened a small consolidation, and also this consolidation we took out internal liquidity of the opposing side, then price turned around and made it the second leg of this push. After price came back, price respected it, the 50% level, and then price shoots away higher again. Yeah, so let's dive into the 3-minute to see what we have there to look for potential entries. So as I said before, Asia made a move lower. It took out these internal liquidity like here, or these short-term lows, but it was respecting that order block, and that's the same story for the 3-minute. If we extend this one, look, price is respecting, trading just below the mean threshold of this order block. But if you take the low, that's much better. It respected the mean threshold to the tip. Then you have clearly a reversal. We have taken this low, intermediate term low, short term low, and here you have your first change of state of delivery. There is your second, but this is all pre-London, so most of us won't trade this. So when going into London, which is here, we go into London, price goes a little bit higher, then made a somewhat deeper retracement into the inversion for value gap or the bullish for value gap, big one. Both were respected. Price started into it, small consolidation. Did it take out this low? Yes, it did take out this low right here. So I took opposing liquidity, then we have an impulsion. So this is the little market cycle going on. So that means consolidation, expansion, reversal, back into this deepest value gap, or maybe this order block, one of the two. So we had consolidation, expansion, reversal, delivery to the upside. So that was one entry, a way to get into this trade, to make it from, let's go long, let's say you first CST, and this is a rather big stop loss, but maybe you could have used a IFED and target, of course, this high right here, and that would be a very nice 1, 2, 3. And in case you've missed it, you would see this running, then price stopped just below the low. That is a common thing that happens right before taking out a higher time frame lower high. Price always consolidates a bit, retraces a bit, and then takes it out in speed. So that's exactly what happened here too. So the question is only which PD array is it going to reverse from? So in this case, price used this PD array right here, and does not make sense in terms of a discount move, discount premium. Yeah, makes perfectly sense. And if you can, and probably this is also exactly. And maybe I have to put it like this. Yeah. And this is a very nice confluence to have when the 50% level of the fair value gap is in line with, for example, a fib level. So that's a nice confluence. So you could avoid it, of course, to see price would shift order flow, which it did. So price took this liquidity right here, first this low, then took this low, and then here's your first CST, and then you could enter on this candle too for the second CST, but that would be a very small position, I think. Only if you want to put your low stop loss here and you take profit here, that is not really a good trade. So maybe therefore it was better to use IFID again, because here we have a structure break and you could use this right here and maybe stop loss in this low 128. That's more like it. That's acceptable. 188, whatever. Yeah. So and then of course there's it on the swing low fractal. So there is your complete swing low fractal. And then price takes out its high, then goes kind of in a high resistance manner, makes its way up to some level, and then price trades all the way back. And look where it found support for a little while on the high that it just took out. This is the January high, the highest high of the two. The bodies are respecting it, respecting the high, trade back into this fair value gap, and also this bearish candle, of course. And then price trades lower, and then with speed it takes out this low right here, this internal low, takes it out, tapping into this order block or fair value gap, one of the two or both, and then price reverts. And actually here what happens here is model X playing out, because this candle is closing this imbalance. Then we have a down close candle, and once we trade above this down close candle is the order block validation. So you could do another trade, a long, of course, a long trade here, tapping here, and target. You could use internal liquidity, or maybe just this high again, because this looks like a signature for a smart money reversal. And usually when you see such speed taking out a low, and then with such a reaction in a very strong bullish environment, you can take the trade along to the next liquidity. You can use this internal or this the high that created the move. Also, you wouldn't expect this to be a breaker structure to go bearish, because if you measure the move from this low to that high, you can see that this is just a discount array. There was this discount array that was taken, and we touched on this order block right here, and we stayed in the upper half. And also, I'm not sure, but let's see what we get here. Also touched it also in the upper half, and then with speed we trade away, create a bearish candle, consolidated a bit, and then we have displacement again. So these are rather big candles, all displacement, all clues that price wanted to trade higher again. So yeah, London. If you look at the London, if you look at the kill zones, what they did was London made a push higher, um, went from here to there. Then lunch consolidated a bit first, then expanded higher, and then New York was kind of the reversal. It made a very high resistance rate due to swing, then made a move lower, retraced a bit, and then all came back for a retracement move. Um, then the New York close, they reversed on New York again to push price higher, and obviously it's going to close somewhere. So yeah, it's a very bullish day. And the final thing that I wanted to show you is this. I showed this a couple of times, I think, but I talked about how this image wall was a BPR, and this BPR didn't act as resistance. So look how fast price traded through this complete BPR, and that is speed. Price just traded through the BPR with speed, and that is exactly what happened. So yeah, I hope you find this insightful, and thank you. Till next time.